So we're going to pivot a bit, and I can actually relate what I've been doing this afternoon into what's going to happen now, because we're going to take a look at the North American market. And as we all know, over the last while, it's been a little depressed. I mean, I think probably, what would you say, Arthur? The US has been kind of hit particularly hard because of COVID.
Yeah, no,
especially the oil and gas.
No, it has. I mean, just look at the rig count. I remember in about 6 years ago, head of Baker Hughes at the time saying the 600 is the new normal, 600 rigs in active use. It used to be in the thousands plus, and we were down to somewhere between 200 and 300, a month or so ago. So it has been hugely hit due to the COVID crisis and the demand destruction that happened in April. So yeah, you're absolutely right. And as a result of that, people have been talking somewhat pessimistically about the industry in the US, the likelihood of more bankruptcies being announced and the likelihood of more takeovers. Now, I don't think it's as doomy and gloomy as as that's been made out, but it's undoubtedly the case that the US has been hit very hard.
Well, surprisingly, I just came from the launch of the World Oil Outlook. So not alone have we given our viewers the energy trilemma to read and digest. Today has just been the launch of the OPEC World Oil Outlook. So that's there, an outlook to 2045. And they're actually saying just what you're saying. It's not as doomy and gloomy as it is right now. I mean, it's horrific right now. And it really is a bloodbath in America, I think, at the moment. And there's bankruptcies, there's tough access to capital is just not available. And some people will go out of business, but somebody would probably, buy those assets. And even the World Oil Outlook is looking ahead and saying that actually in a few years, and in a very quick few years, they will see recovery, I think, in the next 2 years, whereby there's strength in the price, and they see, as an un-OPEC player, and maybe they're a little bit worried about it, but they see them come back in the market. So hopefully we'll hear maybe a little bit about that and see what they're doing in the next session. What do you think?
Yeah, no, it'd be great. And, as you say, hot off the press, that's when you said that just now. I mean, that's surprising. I don't think that was the way we thought OPEC would think about this. So that's interesting. Not more than interesting. Yeah, it's newsworthy.
So there you go. You've heard it here, actually. So we're not sure when America's coming back, but I know our next panel will know all about that. We're going to be taking a look at facilitating the transition of the oil and gas industry in North America. And so we're obviously looking at the US and indeed Canada and looking at the region here. And I'm absolutely delighted to be able to hand this over in just a few minutes to the Managing Director and the Global Head of Commodity Strategy at RBC Capital Markets, a dear friend of the World Energy Council and a good friend of us all in the industry, a good colleague that we know for a long time. So Helima Croft is going to be joining us. We're very excited that she's here, and she's going to head up that panel and really take an in-depth look at what is happening in terms of the US oil and gas market. So stay with us. We'll be back in just a few minutes.
Welcome to this World Energy Week live discussion on facilitating the transition of the oil and gas industry in North America. I'm Helima Croft, Global Head of Commodity Strategy at RBC Capital Markets, and I'm delighted to be joined by this all-star panel today to discuss this very important issue. We first have Mike Howard, President and CEO of Electric Power Research Institute. Hello, Mike.
Hi.
Next, we have Rodolfo Guzman, Managing Partner, Americas, Arthur D. Little. Hello, Rodolfo.
Hi.
We have Dave Hardie, Director, Liability Strategy, Alberta Energy Regulator. And finally, last but not least, Kent Kaufield, Canada Energy Leader, EY. So we're going to start off. Hi, how are you? So we're first going to start off with a general question to all of you. And it's really the big question of what is the role of the fossil fuel industry in a carbon constrained world? So Mike, could you kick us off with that?
Thank you very much for that. So just a little bit about EPRI. It's a global organization. It's really focused on helping to accelerate the technology innovations that help to migrate through this transition. So that's kind of our focus. But the role of fossil fuels in this transition to a much cleaner energy future is really about the intermediary steps. It's about the steps that we have to take to get there. For example, we have an increasing capacity for renewable energy. We are maintaining our nuclear fleet. And when I say maintaining, it's at least maintaining and extending the life of our existing nuclear fleet. We also have fossil fuels. And so more and more, certainly in North America, we are transitioning the existing fossil fleet to less carbon emitting options, which primarily is focused on renewable energy. When I say primarily renewable energy, we also have energy efficiency, we also have demand side management and so on. But there's this gap to make sure that we can balance the demand for electricity and the supply. And that balance is being filled with fossil fuels. Now, fossil fuels is predominantly coal and natural gas. More and more of the fossil fuels is natural gas, less and less coal. As we go forward, I think there will be further transitions to less fossil fuels as we get to a net zero carbon. So to be less fossil fuels, more other forms of cleaner energy, which could include hydrogen as well. So that's kind of where we're on a trajectory toward net zero carbon emissions economy-wide. And fossil fuels play a very important role in this interim to make sure we can balance the need for the demand for certainly electricity and the supply. Fossil fuels is the balancing that's required in the interim.
In the interim, Dave, what are your thoughts on this?
So when I think about role, I think a lot about the sector, and I think about the oil and gas industry itself. And I think, you know, from a role perspective, purely, I think their job is to be leaders. I mean, I think they have a highly educated workforce. I think they are experienced in working towards environmental targets. I think they have the infrastructure that's going to be needed for blending things like hydrogen into natural gas pipeline, for example. They have an inherent ability to raise funds. So from a role perspective, that's what I think. I mean, I agree with everything that Mike said, but this is another aspect of it, another lens for it. The other thing I keep thinking about is, you know, its industry's role is the ability to continue to green themselves, you know, and Mike's got into some of the details. The efforts have been going on for decades, to be clear. It just needs to be accelerated. They need to be sharing best practices and best technology openly. I think there's great value in helping each other knit together and figure out what the best approaches are in a regional basis, but as a whole. And a very collaborative approach to that, I think, is really critical. I also think, you know, and we'll get into this, I'm sure, as we go through the discussion, you know, how do you manage your infrastructure better on a company basis, on a sector basis? What infrastructure needs to be stranded? Even what opportunities need to be stranded? What infrastructure should be decommissioned? What has the great potential for reuse? All of this is a role of the fossil fuel sector to start making these determinations. Because ultimately, at least in my mind, the moral of the story is that you got to innovate. The world's in flux, and to say that's even a massive understatement. We need to innovate rapidly in this time. I'm also going to say that, you know, oftentimes when we think about fossil fuel industry, we leave government and regulators out of the decision, but they are absolutely part of the fossil fuel sector. And so from a government regulator perspective, they really need to start thinking about how do you streamline closure of infrastructure that's no longer needed for fossil fuel development. They really need to focus on assessing alternative energy resource potential in their areas and then start building regulatory structural framework around that for how do you facilitate going from one system and blending its way through into eventually another system. And so, and I actually will also say that like industry, government and regulators really need to be doing this in a very open and transparent collaborative way too.
Rodolfo, same question.
Yes, thank you, Helima. Yeah, I think the fossil industry will play a variety of roles in this transition. We need to remember that hydrocarbons still account for the vast majority of the sources in the global energy matrix. No? So oil, gas still represent a significant portion of the energy that we consume today. Clearly, this will go down as the world continues to transition to cleaner energies and to decarbonization. But I believe that the oil and gas industry is well suited to play a variety of roles. First of all, they will continue supplying a lot of energy because this will be a gradual process. It will not happen overnight. It will take many years. Although we have peak oil demand in the horizon, there will still be a lot of sectors that will rely on hydrocarbons. There are still not renewable solutions, for example, for airlines, for a lot of the marine shipping needs, etc. So hydrocarbons will still continue to supply those needs. Natural gas will particularly play an important role as a bridge fuel that has lower emissions and that can help during this transition until renewable energies become more competitive. I do agree with David that innovation and particularly the capacity of the oil industry to develop new solutions, they will play a big role in areas such as carbon sequestration. No? How can we continue to produce some of these fuels, but at the same time capture the carbon? They also have a large retail infrastructure that today is used for gasoline distribution. That infrastructure, I think, can be reconverted to supply electric vehicles in the future to a large extent. So I do see that oil and gas companies will play a role as well in the marketing and the distribution of clean energies. So I think it's a variety of aspects. I don't expect, although the oil industry is between a rock and a hard place in this transition, I don't expect that it will die or disappear quickly. And certainly it has an opportunity to reinvent itself and play a significant role in the transition.
And finally, Kent, your thoughts?
Well, those are all great comments from the other panelists. I would say the last 9 months have been incredibly hard for everyone, clearly all over the world to varying degrees. But oil and gas companies will use this and are using it as a window into the future. It's been a frightening experience for oil and gas because that's the existential question: is when demand falls through the floor, what do we do with our business? And it's forced them to face a lot of questions in a really abrupt fashion. And so their role coming out of this is absolutely critical at a whole bunch of levels. They've learned and they're going to be way more efficient. And so whether it's cost cutting, innovation, whether it's kind of really being digital as opposed to just doing digital, and there's a big difference between the two, and I'm sure we'll get into some of that. It's forced them to think much differently around diversification, and whether that's integration in renewables and moving towards renewables, as Mike would say, whether it's about allocating capital different, it's forced them to rethink their plans and do it on a much shorter time frame. And it really has driven home, I think, a bunch of, they've got to start thinking more about transition as a strategy as opposed to a reaction. And that would include everything from skills and retraining of their people, thinking about workforce of the future and what does their workforce look like in 5 to 10 years? And then, what does it look like to report differently? Thinking of ESG as a way of telling a story, not only to continue to attract capital investment, but to make sure that the general public understands what oil and gas companies are doing to help move forward. I have, Rodolfo and I will agree on this for sure. Oil and gas is not going anywhere fast, and there will be elements of hydrocarbons around for decades to come. The pace that it tails off, I think, will depend on a number of factors that will be difficult to predict right now. But we know that one of their key roles in the next 2 or 3 years will be to help kickstart the global economy again, because that is the fastest way to get people moving in the near term. But if they do it in a responsible way and take some of that and really drive some innovation and investment in technology, they can actually be the group that funds the transition on a real expeditious basis. So their role's never been more important. And I think in some respects, it's never been more of a challenge for oil and gas companies. It's a very challenging time for them.
I mean, Kent, you talked about the collapse in demand, the historic collapse in demand and prices that we saw this year. I'm wondering if you can sort of talk us through, and I'm going to put this question to everybody, about what are the sort of, real opportunities and challenges the industry is facing because of COVID-19?
Well, the drop in demand in such an abrupt, unpredictable fashion, it is kind of the black swan scenario that was on the top corner of people's desks. Like, what if this ever happened? That'll never happen. And it trickled all the way through the entire chain, not only from upstream producers, but we had midstreamers all across North America, in particular, that suddenly they were long pipe, which was incredibly, no one ever thought they'd be long pipe. How do you manage long pipe? And then, of course, the impact on oilfield services was devastating as everything came to a halt. So, the opportunities and challenges are, they'll probably be set up in segments. In the near term, there is going to be a real opportunity to just get the industry back up on its feet as demand starts to recover. Depending on which stat you believe, by next year, the year after, we will be back up to moving towards where we left off in 2019 or below it, and that's likely to start tailing off by mid 2025 and down. So overall, to get up on its feet, the opportunity is it's going to drive some activity. It's going to drive some near-term investments and maintenance and getting people back to work, getting oil back into the pipelines, getting things moving again, and getting the economy moving again. It's also going to drive a whole new look at investing in technology. How do we take carbon sequestration and make it more real across all of North America? How do we drive things that are going to be more sustainable and use capital in a different way? And I think it'll help oil companies clarify or galvanize their need to tell their story differently around, again, talk about ESG. There is going to be a need. The world capital markets are really going to want to understand how are we spending money as a sector to make ourselves better and more environmentally friendly. And while that was always kind of, I think it was growing in importance over the past decade, I think now it becomes a critical issue, not only for the board, but for senior management as well.
So,
Mike, can I go to you on this?
Yeah.
You look ready to jump in?
Yeah, I definitely agree that hydrocarbons, coal, natural gas, and oil in the electric sector is a transition fuel. No doubt about that. I also, in the work that we're doing and kind of looking at the future, if you look at the overall energy pie, a bigger part, larger percent of that energy pie will be made up of electricity. And the reason is that the electric sector is in a good place to help decarbonize the rest of the economy. Now, this is decade-long transition, so it's, we're still going to be relying on hydrocarbons for the foreseeable future. But as we go out, then the electric sector is able to help the rest of the economy decarbonize, because it is in the best position to decarbonize itself, the electric sector, using nuclear, using renewables, potentially using carbon capture and sequestration, and certainly green hydrogen is another fuel option. So I think the core that will be critically important to enable this will be innovation. I mean, it's the new technologies that'll come about. It is the new electro technologies, electrification, whether it's electric vehicles, electric heating, or what, but it is the enabler. And I think the oil and gas industry can think about how can we use that infrastructure that already is invested to, for example, transport maybe hydrogen. Use existing retail, as I think someone mentioned, as a source for fast charging of electric vehicles. And so I think this is, this is not a solution that's going to happen overnight. But as we look out over the next 2, 3, certainly decades, I think the trend is heading in that direction. Electrification, decarbonization in the electric sector that will enable the rest of the economy to also decarbonize.
Rodolfo, I'd like your thoughts on this. And I'd also like you to think about the question of like, what are the competitive advantages of North America in this transition?
Okay, sure. Yeah, on the question of the COVID-19 and the impact for the industry, I think this is basically accelerating some trends that we're already seeing. The pressure for decarbonization, the pressure for cleaner fuels, in a way, is being accelerated now by COVID. And the oil industry was caught in the middle of a market war for supply between the key producers, Saudi Arabia, Russia, the US crackers. So it was an industry that was already suffering from this oversupply. Demand heavily threatened by this pressure to decarbonize and to move to cleaner energies. So it created this perfect storm. Now, I think the industry has demonstrated quite a bit of resilience. First of all the oil companies in the world managed to maintain the continuity of their operations and protecting the health and safety of their employees. So we did not have a disruption in the supply. So that's quite an achievement for the industry. I think the industry also realized that they needed to take quick actions on their portfolios. The major oil companies quickly decided to cut investments, to postpone some projects, to rebalance portfolios, etc. So I think that also showed quite a bit of discipline and good action. And also an opportunity to enhance digital capabilities, no? Because in this new context of COVID, where people are kind of trapped in their homes, it created also a very good opportunity to use more the digital tools and see how we can gain more efficiencies, no? By automation and more digitalization. On your second question of competitive advantages for North America, I recently read that Boris Johnson in the UK said the UK can become the Saudi Arabia of renewable energies. No,
Yes.
That's a big claim. Now, I think the US is much better positioned, to be honest, than a country like the UK. The US have a lot of regions with a lot of good sun exposure for solar energy, a lot of oceans for offshore wind generation. So there is a lot of potential. There is a lot of potential. In terms of policies, the US has not been as proactive and is probably lagging behind the European countries regarding this adoption of these solutions and trends. But I think it can catch up very quickly, no? So I do believe that there are a lot of and also North America has tremendous centers for innovation, research and development, a lot of scientists working very hard in these topics. So I do believe there is a significant potential for the US to evolve and contribute to this transformation of the industry. And
Dave, your thoughts?
Yeah, no, so I agree with the comments so far. I mean, I'm actually going to take us back to what Kent was talking about a little bit. You know, the question about what has COVID taught us, I mean, it's given us an opportunity, in my mind, for perspective and experience that we didn't expect to have for a long period of time. It honestly feels to me like the current situation, if somebody came out with this as idea for a scenario planning session, you would have assumed it would have gone wildly off the rails for it to happen in the near future, yet here we are. So I think the answer is really for opportunity is it's giving us a look at some key questions that we have to really start thinking our way through in real time and collect real data to do it. And some of the things that I think about are, you know, from a reduced oil demanding environment, for example, what infrastructure you still need to maintain or meet this reduced environment, this reduced demand. I mean, ultimately, we need to start thinking about how to incorporate many of the things that Mike has talked about, and we have to start blending the two systems together. And we have to start thinking about what it's still needed to support from a fossil fuel perspective, and then what becomes available for reuse in other ways. And examples in my mind is, you know, across North America, there's lots of well sites out there that have decommissioned wells on them. They might be fantastic for solar usage. They might be fantastic for geothermal usage. What's lacking, though, is a lot of upfront assessment, real thought as to what infrastructure needs to be retained, at least for a period of time, and what has the resource potential for us and new resources to allow the two systems to blend. The one thing that drives me crazy when it comes to a lot of these discussions, and especially what you read, is people think that you just flip one section off and you flip the next one on and off you go. It's not that easy. We need to have really careful thought on an infrastructure management perspective if North America is going to be coming out strong. Do I think North America will come out strong? They have absolute potential to be world leaders in this space. It's just a matter of really thoughtful, careful planning and making the most of the data and the information that we're up against right now.
And Dave, I'm wondering if you can talk about like who should drive this whole process and the role. I mean, you sit in the role of a regulator. Like, what is the role of like the regulator in this process?
So it's like, I think it's industry and the regulator. I mean, there's the partnership ultimately, you know, oftentimes it's viewed that companies will know everything that there is to know and be able to tap into the market and drive it forward. It doesn't happen if there's regulatory uncertainty, and regulatory uncertainty needs to be fixed so that there is clarity of what the opportunities are, what the framework is, what the obligations are. And regulators often all over the world will start, you know, and they still do this, they produce reports on what's your reserves for crude oil or natural gas or other things. We need to start being able to produce reports that show what's your solar potential, what's your geothermal potential, and on and on and on. So that's the role of the regulator in that space. They have to be able to prove, help prove the potential, but they also have to make sure that they build the framework around it so people know what they're getting into, what they have to deal with it. From a company perspective, it is about having vision and reassessing how they've been doing business. And it's been talked about a lot today. But you've been moving down a path. The world is changing. You have to change with it. You have to innovate with it. So their obligation is to reassess their traditional business model and adapt it as quickly as they can.
Anybody else want to jump in on the whole issue of regulatory uncertainty? I see Kent is getting in there.
Yeah, no, so I would love to. Yeah, you mean this kind of building on what Mike said earlier and David. You know, in the next 50 years, the world's going to need more energy, not less. And I concur with Dave completely. More and more of it's going to come from some form of electrification that's likely not originated by a hydrocarbon. What's kind of the questions we get asked now at a board level and senior management are questions that are difficult to answer because they're not capturing the right data at the right level. And I think this also appeals to the regulatory, you know, and the policy framework. When we start to talk about how do you reduce GHGs and what does it look like, you know, there's a lot of estimates, but the systems haven't moved along the path far enough to give real time, real data and be able to use it to predict or project going forward. And so making better decisions is going to mean probably some time to invest in IT systems, invest in data capture so that the regulator and industry shares real-time data, they understand the data, they trust it, they can share it with the communities. And probably as importantly, then management can make real decisions based on data that they trust and validate, like they used to with financial statement information, because you're going to see a lot of money change hands. Capital is going to have to be invested into new technologies, and they're going to have to understand what the outputs and the impacts are. And big institutional investors are going to understand what are we going to reward people for. So that whole data capture is going to move down the path at a different level. So I'm really keen to see how companies react. We're already starting to see some of that reaction, but that's going to be a big move in the next 5 years.
I can make a couple of comments on the role of the energy authorities and regulators on these transformations. We have some recent examples of how having a clear vision and a strong national mandate can help accelerate the energy transformation of a country. when we had the Fukushima nuclear disaster in Japan a few years ago, countries like Germany that had a strong dependency on nuclear energy decided we need to phase out nuclear energy very quickly and promote new sources of renewable energies. And they were able, at a cost, no? It's a cost for the industry, but when the national government and the energy policy and the private players are aligned with this objective, it can be done. I guess in another example that comes to my mind, the US and the shale revolution, having this tremendous potential of unconventional resources and being able to more than double the crude oil production and significantly increase the natural gas production in the US in a few years, just because there was a clear intent to take advantage of these unconventional resources is another example. Now, of course, we need to move to cleaner sources and renewable energies, but the European Union is leading in this regard, in my opinion. They are setting the new standards. But I do believe that in other countries, if regulators, if policymakers make these ambitions and make this mandate very clear, the private industry will play along, no? And they will be able to achieve these goals.
There's been a lot of discussion about capital and capital allocation. So I wonder if we could dig a little deeper into that. And Ken, can you talk about like the type of investments that oil and gas companies are taking to evolve this transition and whether there's sufficient capital going into the sector?
I think the high level answer is there's almost no capital going into
Right.
the sector or on a relative basis. And so that's a big issue. And we're probably, it's probably more acute in Canada than the US, although I would say, you know, with some of the pullback and fracking, there are a bunch of US participants that are feeling the exact same thing.
Right.
Some of that is just the moment, because with demand, you know, so unstable and so low, you know, capital allocation is just moving away from the sector because they can get a higher return on other places.
Right.
I do believe it, and I think, you know, most analysis points this way, that when the demand does start to rise, there is going to be a gap. There's going to be not only an infrastructure gap, but also probably a supply gap that will last a number of years until renewables can really start to backfill into those core areas. So there is going to be a window here where, you know, the pricing will come back, capital will move here on certainly on a medium-term basis. But I think how much move back and the pace it moves back will depend largely on the direction North American energy companies take to do just what we're discussing. How are they planning for the future? How are they thinking about evolution? How are they going to use the capital in a way that's going to have longer term returns? Because, you know, fracking, it was fine for people to move money in and out more quickly because they understood, you know, the cost to get fracking up and running and get oil out of the ground, and the timelines were compressed. You know, oil sands are decades, you know, there's billions of dollars, but it takes decades to get your return. So capital is going to be somewhere in the middle. So for capital to come back, I think there'll be some natural market forces that will move price up, and, you know, some of the low level capital will come back, but then they're going to have to tell a much better story about what the long term of that looks like. You know, BP is the example that people are using where they're taking a very aggressive strategy to it, and you can see how the markets are reacting to that. Their share price is down. The markets are kind of interested to hear what is that long-term story. They're not negative on it, but they want to understand what's next. And the industry is looking at that very carefully, saying, okay, we recognize we have to have a long-term strategy, but in the near term, the message from the capital markets is still pretty clear. We want to see how it translates to your bottom line. How is our dividend what's your dividend going to look like? What's our return on capital going to look like? So it's kind of a middle ground for large oil and gas companies right now. So they've got to tell a better story long term, but in the interim, the challenge is they got to maintain a bottom line.
Rodolfo, any thoughts on the capital allocation challenge?
Yeah. I do agree with Kent to a large extent. I think for the oil industry, it's very different to live in an environment with $40 oil,
right,
than an environment of $70 oil. The margin is very different. The profitability levels and the ability to continue to pay dividends and attract investment from shareholders is quite different. In fact, even with the higher oil prices that we had last year, the oil sector was underperforming significantly in terms of financial returns, no, in the stock market. And this has now been accentuated with the COVID. There has been a rebound in the stock market, but the oil companies have not rebounded as fast. And they continue to generate lower returns. So I do think that for the big oil players, what this means is need for more discipline in capital allocation. We have seen a reduction across the board of between 25 and 30% on the capex levels for this year. I think they will gradually come back because there will be a rebound in demand and a need for additional supply. But after this crisis, I think the players will be very, very careful about where they allocate their investment. And the financing institutions are also going to be very selective.
Mike and Dave, do you want to pick up this whole issue of capital allocation?
Mike, do you want to go?
Yeah, so this is Mike. I definitely think they're going to be a lot more concerned about where they allocate capital, a lot more certainty about potential growth. I think it's a whole new day in looking to the future. So very little speculation and much more certainty about how they're going to be allocating capital.
And David, final thoughts on this topic?
Yeah, no, I totally agree. It's the uncertainty that's the problem. And so really the task at hand is how do we build certainty where uncertainty is currently in existence? And to me, that comes back to there just needs to be a plan. There needs to be a thought, both on a corporate level, on a sector level, maybe on a regional basis, like what is the plan for infrastructure management as a whole? What's the potential? And that'll start settling at least some of the uncertainty.
We've had a
just add
get
one
back in
thing.
there?
Yeah, but part of what makes this so challenging is all the different players. Right? You've got the companies themselves, you got the financial community, you've got the legislators, you've got the regulators. I mean, you have a lot of pieces that have to come together to make this work. And it is, I think, the most complex industry that's out there. But it's also the one industry that is the most critical to the overall health of our economy as well.
I mean, we've had a couple of speakers talking about the role of technology. I'm just wondering if we could dive in a little deeper on that topic in terms of, how is technology enabling companies to reach their decarbonization and ESG goals? And so, Kent, I'm going to put you on the hot seat on that one as well.
Well, I mean, there's a whole number of ways they've invested and driven some new ways of not only extracting hydrocarbons, but transporting hydrocarbons that have reduced emissions. There's much better technologies for cleaning after you've drilled. So whether it's wells or whether it's tailings ponds, those are all coming online, and things that were kind of unthinkable 10 or 15 years ago are now becoming more and more common and affordable in many ways. And I think this is where the regulator and the policymakers play a really important role is not only encouraging, but kind of setting bars for the industry to get through some of these, to adopt these new technologies a little more rapidly. Because I think that is going to help. The faster the industry can continue to remediate itself and clean up, will send a great message to the markets. But at the same time, it's putting real technology to use. It's putting innovation to use. Those technologies, in many cases, we've in the oil sands as an example, solar is a very common source of power up in remote locations where they're doing drilling, and that's actually turned some of the tables on. Do we use a diesel generator, or can we use solar in an effective way? That's a great innovation. It's helping clean up what we're currently doing. And what we're learning there, we can start to translate when we do have distributed power in homes in Calgary at some stage. So that practical application of renewables in the extraction and transportation of oil and gas is one of the key ways that we'll do it. And we have to continue to encourage that. And I'd love to hear Dave's perspectives on how they can, regulator can play a role in pushing that forward and accelerating the adoption of some of those technologies that exist today.
Over to you, Dave.
Okay, thanks for that, Ken. So I agree. I think that it's a huge role. It's a very smart guy I was on a panel with before, Mike, at Congress, was pointing out the role the regulator can play when it comes to pumped hydro. The potential is there in lots of different areas. It's rethinking from a regulatory perspective what end looks like. So end of a mine site, is not level ground like it used to be. It never works that way. But there is potential for reuse that the regulator needs to start thinking very hard about. What is the next end state look like? Is there potential reuse options that are available and just haven't been investigated? We haven't done the time and energy, and we haven't collected the data or require the data to be provided. And from, in Alberta, for example, there's a lot of investigation right now from building and technology from traditional oil and gas companies thinking very hard about, do I have a bunch of well sites? Can I turn these well sites into solar farms? And if I can turn them into solar farms, am I broadening my spectrum in terms of what I am as an organization? Am I now both an oil and gas company and an energy provider and am I now making money, revenue, selling back into the grid to provide another source of long-term value into the company? So from a regulatory perspective, I think it's really understanding our seat at the table and sitting at the table and thinking our way through this partnership arrangement with industry and for the benefit of the economy. But I agree with everything.
Yeah, sure. No, I think technologies, without a doubt, the biggest enabler that the industry have for transforming itself. And if we look at history in the oil and gas industry, the technological revolution that we have seen in the past, deep water, for example, deep water exploration, it was unthinkable decades ago, no? In fact, it was always thought that the world was going to run out of oil because we were running out of supply, and nobody thought, okay, we have these immense amounts of reserve in deep water. And the industry was capable of developing the technology to exploit those resources. The same with the fracking, no? Horizontal drilling and the ability to do this fracking to extract these resources that before were just too costly. Now we have to move into cleaner energies, and I think the work that is being done around hydrogen and the potential for a hydrogen-based economy is certainly immense. Carbon capture and sequestration is another area where technology is enabling a big impact in the industry. Batteries in the electric mobility sector, we have seen how a significant reduction in the cost of batteries has enabled electric vehicles to become quite competitive now, and they are probably going to be displacing very soon the internal combustion engine vehicles. So a lot of radical changes will come because they are enabled by these technology advancements.
Yeah.
And Mike, and same question to you, but I know also if you could talk a little bit about storage as well.
Okay, so a couple of points here I want to make. One is we did a study, I don't know, maybe 2 or 3 years ago that looked at, we all talk about that technology innovation is accelerating, and we wanted to understand more quantitatively about what that means. And the bottom line of the study is that I say 25, 8 is the new 25. What that means is if you go back and look at the technology innovations that have occurred in this space over the last 25 years, it's not going to happen the same magnitude of change over the next 25 years. It's 8 years. That's the acceleration that's occurring in this space that is really going to make a huge difference. So that's one point. The second point has to do with energy storage. For at least when it comes to electric transportation, it's all about not only getting the cost down, but getting the energy density up, being able to pack more electricity in a smaller space. And the energy density is improving about 20% every 18 months. And so we are right now on the edge of having a battery. In fact, there are some manufacturers that are already offering this that will go 400 miles on a single charge. And if you look at what that means, it almost means that the energy density of an electric vehicle that'll go 400 miles is almost the exact energy density of a tank of gas with an internal combustion engine. That is the first time in history that we've reached that point. And so that is a huge tipping point. And so what it means is that electric vehicles are a real option. Now, the costs have to come down, and the costs are coming down. But it's just and if you look at what's going to happen over the next 8 years, over the next 5 years, in terms of addressing all of these issues, whether it's more efficient solar, whether it's more efficient catalyst to generate hydrogen from H2O, whether it's looking at getting more energy out of wind turbines, using advanced power electronics, digital communication, and other things, I think what we're going to see over these next few years is a profound change in the amount of technology and how it will enable this whole cleaner energy across the board.
Before we move on to final thoughts, I want to pick up on one more theme that I heard in our discussion today. I've had multiple speakers talk about sort of the public perception of the industry. And there's been this sense that the oil and gas industry is really on its sort of back foot in terms of public perception. And I'm just wondering, is there this disconnect between this perception and the reality of what oil and gas companies are doing to try to facilitate this transition? And so, Ken, I want to go to you with that question. And also, we talk about in terms of capital allocation and attracting investment, but what does this mean also with this perception in terms of attracting young people to want to work in this industry?
Well, it's a really good question, Helima. Perception is reality. So we have two very divided sides right now. One believes oil and gas is evil, and the other believes that we fuel the entire economy. And I think we've got to kind of get to more of a middle ground. The reality is that the oil and gas industry, in some instances, has not done itself any favors in how it's communicated historically. But I think certainly from a Canadian perspective, and I'd say this would be some of our U.S. majors as well, they've gotten a lot better in the last decade, and they've consciously tried to figure out how do they tell their story in a way that is sustainable, and then not just to tell the story, but to make it real by demonstrating where they're making investments and how they are cleaning up. I think there's going to be a very natural transition into a broader ESG reporting framework, and I think the industry, in some cases, maybe reluctantly, but in other cases, they're going to willingly start to adopt it and move into it, because our industry in North America is very proud of how it's evolved and its technology and its how it innovates compared to some of the rest around the world. So you're going to see a concerted effort with resources put into communicating differently, telling a more robust story, and being as transparent as they've ever been or more in the past. And I think the regulators will play a role in that. I think the financial markets will play a role in demanding that. But that's going to be a big component of the next stage of how the oil and gas industry is going to evolve.
Dave, you want to jump in on that one?
Yeah, sure. So I categorically agree with Kent's comments. Transparency is critical. In my earlier comment, there's been a lot of greening that's gone on, but there's very little communication out of what that has looked like. We obviously need to accelerate that. Transparency is going to be critical. And honestly, for future workforce wanting to work in, let's say, an oil and gas, traditional oil and gas company, it's their ability to demonstrate their ability to evolve, their ability to innovate. That would be very exciting, I would think, to a lot of people. How do you take an industry and drive it into the new world? Pace will be critical, obviously, for us being able to do it well. But from a public sentiment perspective, the proof in the pudding will be transparently opening the doors to show all the evolution that's going on.
Rodolfo?
Yes. Yeah, no, I agree. I think it's perhaps not only transparency, but will also be reflected in accountability, no? And we're seeing more and more demands and pressures to the oil industry to report and disclose more information. I still think that there is a bit of disconnect, or maybe different speeds between the European players that are taking this more seriously and some of the US players that are lagging behind. But clearly the pressure is on everyone to change. And now we're not expecting only cosmetic changes. No, in the past, oil companies would do a bit of marketing about their renewable efforts, but they will not invest anything there. Marketing campaigns, even change of names, no, like Statoil changing to Equinor, etc. But now I think the public is demanding real results in terms of our responsibility, no, with the environment and this big concern about global warming. So the oil industry will have to get into that wagon, I believe.
And Mike, any thoughts on this?
So I've been in this industry for 40 years, and I can truly say the energy industry of yesterday is not the energy industry of tomorrow. There is a tremendous amount of transition that is occurring and will continue to occur. When I talk to earlier career employees, I say, if you really want to make a difference on this planet, where there's a tremendous need for innovation that will truly help society, there is no better place than to think about a long-term career in the energy space. It is critically needed. It is this industry, everything, it depends on it. And you, I tell our staff, you are in a position to truly make a difference over your career. And there's no better time in history to be part of it.
Well, that is a great way to sort of bring this conversation to a conclusion. I just wonder if anyone has any final thoughts they want to share with our viewers before we end this session. So I'm going to go around the room again. So Dave, any final thoughts?
The thing to me is, we've talked a lot about infrastructure. It's either going to be an enabler or a constraint. So we have to think about what the various aspects are. We have to plan for these things. If we want to make the most of our opportunities, it'd be using existing infrastructure, finding reuse potential. And to Mike's point, it is there's a lot of seats at the table. Building alignment is going to be critical to do that. But the value proposition of us succeeding in that space is massive.
Kent.
For all the fear and the tragedy that COVID has kind of wreaked upon various parts of the world, it's also provided our oil and gas companies with a terrifying and enlightening time machine into the future of what does it look like in 2040 or 2050 when oil demand drops and it doesn't look like it's coming back. And I think what we're hearing from boards and from senior management is this is a tremendous opportunity to both get more efficient, to get diversify, and to think about how the role we want to play in North America to transition. So this, when it rolls back, when we come back past COVID, whatever it looks like, they'll have learned some lessons like this. This is what the world's going to look like at some stage. Are we prepared to lead in that? Are we prepared to have our shareholders and our people thrive through it? And can we make a difference during the transition?
Rodolfo.
Yes, no, I couldn't agree more. I think it's very clear that the industry has to accelerate this transformation. The challenge is going to be how quickly and how can you do it without destroying value? Because we are asking players that are still heavily invested in hydrocarbons to reinvent themselves. And as we have seen from the BP example that Ken mentioned earlier, sometimes the market will not react favorable, no? when you try to announce a completely different strategy. So the challenge for the management of these oil players is, how can I devise strategies that make sense, that are attractive, that will take me to the goal, and will help me transform while continuing to create value for the shareholders, and to continuing to play a role in society. I think ingenuity, innovation, creativity, all will be very critical elements, no, in this process.
Mike, you have the final word for final thoughts.
So this is a long play. The energy transition, I think somebody mentioned, doesn't start by just flipping a switch, but it does start. And the decisions we are making right now will impact the world we live in 2050. And the most important thing is to understand it, get engaged, be part of it, and shape the future of energy globally.
Well, that is an excellent way to bring this session to a conclusion. I want to thank all of our speakers and all of our listeners and participants in this World Energy Week live session. Thank you very much. Bye.
Thank you.
Thank you.
Thanks all.
And welcome back. And indeed, a great look at that transition of the oil and gas industry and what's going on in North America. Excuse me. So a very fascinating conversation there led by Helima Croft. And I think there was just some great points to pick up on. Let me see if Arthur is around and we can pick up on them both together. And
yeah, I'm here.
Really have a look there. But I loved that sort of closing chat there, that it is, we have the capability to shape the future of energy. And there was almost a call to action out there, Arthur, to the key players at the moment. It's there for the taking. Do it right, do it sensibly, do it strategically. But, you know, we want to accelerate this energy transition without losing value. We all have to be looking at a low carbon future. But, you know, it's about really, and I loved it. There were words like be creative, be strategic, you know, and make it, own it.
Yeah, no, I agree. I think, you know, one of the key phrases was that what the pandemic has done and the demand destruction that came with that was that it gives you a window into the future. It has accelerated the thinking of the oil and gas industry in North America to think about the rapid changes it's going to have to make to enable the transition for the future. It's not without its challenges, as we heard, but it nevertheless is something, as you said in your opening, Mark, they're going to have to embrace and they can take a lead on. But I thought it was also interesting to get some views with regard to the regulation and the regulator's role within this. In other words, working with industry, we have to think about the end state of that existing infrastructure and how that's going to transition to the new.
And I think we're hearing that, Arthur, around the world, and, you know, particularly to hear this in the US at the moment too. And I think there's a bit of agreement that Europe is probably ahead of the game. But I suppose there's such uncertainty in America at the moment, because, you know, it's an election year, and quite honestly, what regulation is in place this week might change, could change, probably will change if there's somebody else in power there. But, and again, you know, it's all going to be looked at. So at the moment, I don't think they can commit to what's happening. But interesting that it doesn't matter if it is developed market, developing market, emerging markets, everybody is looking for that. I think the signposts from the governments, from the policymakers, from regulation, because the key players want to make those investments, but they really need to be clear where they're going to go.
I agree, and I think, you know, regardless of who gets elected in a month's time, or we hope in a month's time, the ESG agenda is not going away. And I think we heard it near the end, which is that a better narrative has to come from the oil and gas industry. And it's not a better narrative just to kind of greenwash your way through the next 6 to 9 months. It's a better narrative because it needs to attract a new generation of talent to be able to work in this industry. It's a better narrative because actually this transition to the new is probably one of the most exciting industry agendas that we're going to embrace over the next 10 years. And we want that talent, one, to be motivated by that journey, but also to be part of it. And unless they do a better job, regardless who gets elected in a month's time against that ESG agenda, retelling their story, then I think, you know, they've got some hard times ahead. So I thought that was a good call out for the industry and why that's necessary regardless of what happens.
Indeed it was. And I think one of the other things they talked about too one of the colleagues brought it up, talking about how, you know, technologically advanced this industry always has been. And again, it probably comes back to maybe they've never told the story well, because when you think of it, as he said, you know, there was a time when there was no deep sea drilling and exploration. There was a time when there was no fracking. The development of technology and the creativity, you know, that is in this industry. Now it's been asked to be a cleaner, greener industry, a different industry to pivot again. But they're well able to do it, and they've been doing it forever. But I suppose it's just a lot more visible now. And again, I think everybody's beginning to realize how important industry is, this industry, particularly energy, is to the future of our lives, basically.
Yes, and I think we heard this phrase from Mike, 8 is the new 25. When we talk about this technology cycle that we're now on. And I do think it's, you know, one of the great untold stories really is around the way in which technology with a big T has been embraced by the oil and gas industry forever. It always amazes me in terms of the way in which that's being used, the way in which innovation is flowing through. We hear all about innovation in other industries. Very rarely do we hear it about it in this industry. Now, clearly, that has been often associated with the extraction of hydrocarbons, and not everyone thinks a hydrocarbon is the right word or the right way forward. And so I think it's got to be balanced. It's got to be the leverage of technology to enable cleaner hydrocarbons to be extracted. And we heard that from the colleague from Canada talking about how in the oil sands industry, they're now using solar as part of their extraction capability. So this is a good story that tells basically of carbon abatement in different ways. And I do think that's really important for the industry to highlight how basically 8 will be the new 25, and highlight how it will be used in the transition to the new normal over the course of the next 10 to 20 years.
No, so it's important to keep an eye on that focus. But again, you know, saying, I think particularly that the US industry at the minute and the North American industry, they're probably a bit short of capital there, and everyone's been so cautious in terms of delivering those funds, and they're just checking everything, and it's not the easy money that used to be there for the oil and gas industry particularly.
No, it isn't, Etna, and I think you know, the market capitalization of the supers has been one of these stories. It relates to me because my old organization before I retired was Accenture, and recently Accenture's market capitalization was higher than that of ExxonMobil. I mean, I can't tell you how kind of fundamentally jarring that is for me, having worked in the oil and gas industry all of my life. But it's a demonstration that actually the sentiment isn't necessarily there in terms of where capital is flowing as far as the oil and gas industry is concerned. And even, you know, BP was used as an example there. Even though an organization like a BP or an Equinor or a Repsol or a Total have done a much better job of repositioning their strategy, their pivot to the new is definitely being articulated. But again, look at the share price, look at the way the capital markets are still uncertain about, is the adequate return on investment actually going to happen within these organizations as they transition to the new? Now, we perhaps believe it will be, but I think the story is there. But have the capital markets been convinced? Not as of today.
Absolutely not. And I think we see there that, you know, BP took a brave step. I think everybody sees that, but the market doesn't like uncertainty. So it's willing to, I think, wait. And, you know, we all hope that BP, their strategy will be rewarded. But unfortunately, the immediate reaction is they've got to suffer and go through that and really prove that that's what they want to do.